Okay, we're live. Good morning. Started the live stream a little bit late today. So let me give you an update on the $100 challenge. And let me give you a brief rundown of what happened, why I entered yesterday, and why the entry actually stopped me out today, but I was able to get another re entry. So yesterday I did enter NQ. I entered NQ right towards the daily close. And I'm sorry, I think it was right at the new daily candle open. So somewhere around here. Now we were in profit on the $100 to a million challenge account. We were in profit. I think at the lowest we were in profit about 150. Obviously, I didn't close it, and then we got New York Open, and we got that pump right back up to resistance. I had a sell limit, and that sell limit was right here. So what that sell limit did is, as soon as we triggered this, we came down, we were in profit, and then we started to rush back up, automatically closed the sell limit, and I closed the sell that I had up here since yesterday. Now I told myself, okay, was this a possibility of happening before a continued move lower? Yes, it was. Normally, when you have these type of moves, especially during low vol sessions, like after the daily candles closed and all those hours leading up to New York, you get these false moves as soon as the market opens to then take you back down to the same direction we're going. It doesn't happen all the time. Obviously, if you're right, it tends to happen. But in this case, that's what we got. So I told myself, okay, I had these levels here marked up on the hourly. And as you can see here is resistance, 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 deviation, resistance. So all we did is we came back and retested that 20,500-ish level. And now we're kind of coming back down. We'll see if we can break down and follow the trend a little bit more here. And the more we do break down, the better. Where am I going to be looking to scale in more shorts? Well, we're right back below this area where I had my sell limit. So I would like to see these lows get taken. I would like to see this low get taken and possibly play it for a lower high. Now enter some more positions. That being said, once we were coming up here, closed the initial short, closed this sell at a loss, and I think I ended up losing a couple bucks on the account, on the $100 account. And I'm up that now, and I'm going to show you that here in a second. As you can see, I'm still doing the challenge of passing the 300K funded account. We're up about 5,800. We need 30,000 in order to pass that account. That's phase one. Then phase two, we need 15,000. So if this could be a winning trade, this would add to my thesis. Obviously, I'm still looking for a break of this low. I still need that to break. You have these higher lows here. You have this higher low. Let's go to, this is 4 hour on trade locker. Let's go 4 hour here. You have low, higher low, higher low, higher low, which is bullish. It's bullish, so I know I'm trading against a trend here. But I need to see these lows get taken out. And that would give me more confidence in targeting these lows here. And if we're able to break this low, then I'll start to add some nice positions, heavy positions on Trade Locker to pass the 300K account, and also on the $100 account challenge. So that's
Hey,
what in
hey,
the world.
hey, hey.
Okay, all right. Hey. Did I change that too? That scared the shit out of me. What was going on there? So that's pretty much what I'm looking for. I need to see these lows get taken out. They look like they are. It's primed to get taken out by how it's starting to become a real easy trend line to see. And usually when you do see a trend line, if this was bullish and if we would continue the uptrend, we're still uptrending, just to point out the obvious, but you want to see these higher lows start to break these previous highs, and we haven't seen that. That's why it's easy to follow up on my thesis, because as soon as we start wicking, kind of gives me confidence and start shorting the market, even though I'm going against the trend. But now you have this easy to see trend line. And if we're able to make it all the way back down again, I mean, we could have another bounce back up before lower, but it starts to paint the picture that retail is going to start to buy this. They're going to buy this. It's real easy to see. It's a real nice support level, arbitrary line. And as soon as we get here, they're going to buy. Now, they're buying with the trend, absolutely, but I think that breaks and we start to have a pullback leading into election. Now, after election, we'll see how the chart's looking, but I do believe in my thesis in that we are going to see a pullback first before we buy the dip. Pretty much at this moment in time, there is a window of weakness, if you guys don't know about expiration. So we are in a window of weakness. That doesn't mean you short the window of weakness. So I'm playing against the trend here, which increases the probability of you being wrong. So that's why when you're entering a trade against the trend, you have to make sure you're entering it close to your invalidation area. You don't want to diddle anywhere in the middle. So if you see resistance, you take it there and your stops are right above it. That's how you trade these. That's how you trade and have a tight stop at that. That's how you trade against the trend. So we have this area here. So we kind of broke that low. Now we'll see if we can push back up here, test that, make a lower high, then make a lower low. Then we'll see if we can challenge these lows here and then ultimately break. If we can break that, then like I said, we're going to challenge these lows. And if we can break that, that gives me the confidence of holding these trades to potentially the 1st of November. I don't know how low we're going to go, but I did want not a massive pullback, but at least a 6% pullback on NASDAQ and about a 3 to 4% on SPY. It doesn't seem like we're going to get that because I'm also using time with trading. And I always wanted to see if we're able to get that before the election, so before the 5th. And it's kind of too steep at this point. So we'll see what type of volatility brings us. And it could still happen. We can still bottom probably at the midpoint of November. So that's something I need to keep my eye out. Actually, let me just look at the S&P 500 because I know we did have I had some markings here that went up. That went all the way to the populist election years here. It wasn't on this S&P. Let's try this one. I don't think it was this one either. No. Oh, which one was it? Oh, CBOE. Had to be that one. Yeah. Okay. Let's go all the way back here. Here we are. So I've noticed that we have a populist election year. Let's see how this is looking. This is kind of waterfalling back down now. So we're kind of see during election month and the month prior, we do get a pump. In this case, we got a pump all the way to October 21st, 1968, and then we got a retracement of about 3% on the NASDAQ. I'm sorry, on the S&P 500. And we printed the low right the 4th of November. Okay, we printed the low the 4th of November. So remember, we topped the 28th, or you can say we topped the 21st, and then we bottomed the 4th of November. Okay, and I have these printed here after the election. You got a 37% downside move. Here's 1972 elections. You created a top the 4th of October. You can even say the 10th of October. Then you fell 4.5 basis points to mid-October. And then we had that rally. So that was in the month of October. Here you have a top towards the end of October. Then you have a bottom the 10th of November. All right, that was 1976 election year. And the last election year that I have marked up here is you had a top around the 17th, 16th, and then you bottomed end of October. So what does that tell us? That tells us that we have at least until the 10th of November of potential buying the dip scenarios, which means the market could go down. Now, in all these cases, the market during election on the S&P 500, we fell 3.70 basis points. We fell 4.5 pretty much percent during 1972 election year. In 1976, we fell 5.38 points, and in 1980, we fell 7 points. Now, NASDAQ almost moves double as the S&P. So if we can average all these out, you're probably looking roughly at about 3 to 4% dive on the S&P 500 leading up to election. And if that's the case, then that's why I was looking at NASDAQ of about 6%, close to 7% retracement on the NASDAQ. And the closest one that I see here is actually, let's see here. That was, we bottomed the 4th of November. It's the one that we bottomed on the 10th. This one right here. This was almost a 5.5% retracement. We topped. Wait a minute here. We topped here. Look, we topped the beginning of November and we bottomed close to mid-November. We bottomed on the 10th. So we can get something similar here in this case, where we're chopping on the upside. We're just hitting resistance, and then we start that volatility and we get that move down. That's going to give us a buyable dip opportunity. And that's what I'm looking for on the NASDAQ. Okay. So I just wanted to update you guys on the trade. Let me review it one more time. We're having a nice bounce here. This area here has to hold. The moment we flip this area, I'm taking my shorts off the table and we'll wait to see if it moves higher before potentially moving lower. So just to recap my trade, entered NASDAQ yesterday after daily close. I think it was right after this move up here, or this move up here. I think it was here. Didn't take profit. Okay, let's note this. Didn't take profit all the way down. New York session opened. We got that nice pump that pretty much triggered a sell limit I had here. And that sell limit went in negative, closed out at a loss, and closed the trade that I had entered yesterday after daily close on the new daily candle open. I closed that at a profit, a slight profit, but the loss was, like I said, a couple dollars more than the initial trade. So I lost a couple bucks overall on the account. Today, I entered a short position roughly around these areas here. You can see here in Trade Locker. Let's go to the 5-minute. Here we are. And shorted almost the top of this here. And also on a $100 account. We are up here on the $100 account. We are up $95. So in order to continue this downward move, it has to respect these EMAs and it has to respect this area here. Can't flip this area again. It just can't. This is a very important area. So I am looking for possibly a retest of this area. Then you're coming back down. And like I said, I'm not going to add any shorts here anymore. I had 2 shorts running on the $100 account. I have 2 sells right at the top here. So I'm not going to be shorting it. If this is able to go in my favor, I mean, just a TP, if we can just blow this out. So one short position is about $200. So close to $400 here. But I'm really thinking that we can take this. If we start to waterfall down here today, and it confirms the thesis, it confirms the bias, we can finally get that break of that daily level here, at least. And then we can probably get a retest close to the end of October. And then finally the first week, probably another push down. And we can grow the account to a minimum of 800 to 1,000 potentially. Right. And this lines up also with the moving average, the 50 daily moving average. So that's what I'm looking at here. We'll see what tends to happen. But that's pretty much the review. That's all I want to live stream for today. And hopefully everybody has a great day.